What is going on, everyone, and welcome back to Explain the Charts. Today is Friday, October 10th, 2025, and we are taking an in-depth look at Tesla, ticker symbol Tesla. There has been a ton of volatility this week, driven by some major company news that the market did not react well to. We are going to break down that news, correlate it to the price action, and identify the key levels you need to be watching right now. Let's start by looking at the daily chart to get a sense of the big picture. The big story this week revolves around Tesla's announcement of new, cheaper, stripped-down versions of its Model Y and Model 3 vehicles. The Model Y now has a standard range version starting just under $40,000. This move is a direct response to the expiration of the $7,500 federal EV tax credit at the end of September, which has investors worried about a potential drop-off in demand. However, Wall Street viewed this news as a big disappointment, causing the stock to fall sharply on Tuesday, October 7th. Many analysts were hoping for entirely new models, not just cheaper trims of the existing lineup, which they see as becoming stale. There are also significant concerns that these lower-priced models will cannibalize sales of higher-margin vehicles, hurting Tesla's overall profitability. This came right after a sell the news reaction to Tesla's record Q3 delivery numbers, which were boosted by buyers rushing to get the tax credit before it expired. Now let's look at how this has played out on the daily chart. After a massive run-up from a low near $284 in early June, the stock put in a 2025 high of $470.75 just last week on October 2nd. This peak coincided perfectly with the positive delivery numbers, but the price was immediately and aggressively rejected from that level. That reversal marked a classic exhaustion top, where the good news was already priced in. The subsequent news about the cheaper models then acted as a major catalyst to accelerate the selling pressure. Zooming in on this recent action, we can see the anatomy of this reversal more clearly. The candle on October 2nd shows a huge upper wick, indicating that sellers overwhelmed buyers at the highs. Then, on October 7th, the day of the announcement, the stock gapped down and closed near its lows, falling over 3%. Since that peak at $470, the price has been in a steep downtrend, and yesterday it made a new low of $426.18 before finding a slight bounce. The former peak around $470 is now a massive area of resistance for the foreseeable future. On the downside, the price is currently struggling to hold a key support zone. This zone is around the $425 to $430 area, which has acted as both support and resistance multiple times throughout September. A definitive break below this level would be very bearish in the short term. Now, if we switch over to the 1-hour chart, we can see the bearish momentum in more detail. Since the peak on October 2nd, the price has been forming a clear series of lower highs and lower lows. Each attempt to rally has been sold off, which is a classic sign that sellers are in firm control of the short-term trend. The price is currently trading well below its key moving averages on this time frame, reinforcing the bearish outlook. We can see the sharp drop on October 7th, followed by several days of consolidation and grinding lower. The bounce from the $426 low yesterday was notable, but it has so far failed to reclaim any significant prior support levels. Drilling down even further to the 15-minute chart for yesterday's action, we can see the intraday battle. The stock spent most of the day trying to establish a floor around the $428 to $430 level before ultimately breaking down to the low of $426.18. There was a late-day rally into the close, but the overall pattern for the session remained weak. This price action suggests that while some buyers are stepping in at these lower levels, the selling pressure has not yet fully subsided. Any rally attempts today will likely face resistance at yesterday's broken support levels, particularly around $430 and $435. So, let's go back to the daily chart and outline the potential scenarios from here. For the bulls, the argument is that this pullback is an overreaction and a healthy correction after a massive run. They would point to the long-term potential of Tesla's AI and energy businesses and argue that cheaper models will ultimately drive higher volumes. For a bullish case to gain traction, the price absolutely must hold this $425 support level. A strong bounce from here and a reclaim of the $445 level would be the first sign that the bulls are regaining control. On the other hand, the bearish case is currently much stronger from a technical and fundamental standpoint. The negative news catalyst, the major rejection from all-time highs, and the breaking of market structure all point to further downside. If the stock closes decisively below $425, the bears will be targeting the next major support level. That next level of interest sits around the $416 area, which was a pivot point in mid-September. To recap, the key price levels to watch are critical right now. Major resistance is now established at the recent high of $470.75, with minor resistance at $445 and $453. Immediate support is the zone between $425 and $426. If that level fails to hold, the next significant support target is down at $416. Given the sharp reversal and the negative news catalyst, the short-term momentum is undeniably bearish. I would assign a roughly 60% probability that we see a test of the $416 level in the coming week or two, especially if the broader market shows any weakness. For a bullish reversal, we need to see price reclaim the $445 level on strong volume. I'd place the likelihood of that happening in the short term at around 30% without a new positive catalyst. Look for how the price reacts around this crucial $425 support level today and early next week. Its ability to hold or break will likely dictate the next major move. That is all for today's analysis on Tesla. Remember, this video is for informational and educational purposes only and should not be considered financial or investment advice. Always conduct your own research and due diligence before making any trading decisions. If you found this breakdown helpful, please hit the like button, subscribe to Explain the Charts, and let me know your thoughts on Tesla in the comments below. Thanks for watching, and I'll see you in the next one.